bring in Rhythm here. Rhythm, the government, the new thinking in the government is that the growth needs to be driven by the private sector, which is a bit different from what we've seen or what we saw in the UPA, where there was a lot of government presence. We're seeing a very strong emphasis on disinvestment as well. So what can the budget really do to walk the talk, to get the private investor in, to get private industry participate in the India growth story?
No, I think eventually the private guy will come in. But I think the initial kickstart will have to come from the government. I mean, look at, say, for example, infrastructure. For the moment, the government has stopped doing PPP. It's doing EPC, right? And it is basically owning these infrastructure projects, because right now the private sector does not have the balance sheet or the appetite to actually spend money. But once you get that lift, then the private sector will certainly walk in. And so that transition is what the government has to manage. You know, one more point that we should not lose sight of is that over the past 12 months, government expenditure has come down a lot.
Yes.
And that has been a big drag on economic growth.
Absolutely.
Hopefully, because of the flexibility that the finance minister has next year, he will be able to lift government spending, and that itself will give a little bit of a lift to GDP growth, and you will see that private sector investors will actually start coming in.
Okay, let me bring in Dr. Bhalla and Dr. Kumar on this. Sorry, Rhythm, sorry for interrupting, but will we see the government increase expenditure on crucial infrastructure projects? Because yes, government expenditure has been consistently.
I think so, absolutely. For the next year, they will do it. They will also increase the share of EPCs, the engineering project contracts, as they are called, in place of PPPs, because they know that the latter are not taking off, and that they need to get some public spending up to crowd in the private sector. And I don't agree with Ajit about maintaining the next year's fiscal targets of 3.6 and 3.0. If they've achieved this year's, that would prove their credibility in the eyes of the credit rating agencies. And then if they give themselves a little more fiscal space and say that this is needed to restart, reignite the economy, reignite the investment cycle, I think no credit rating agency would come down, because our debt to GDP ratio is still very low, and our debt servicing record has been very good, and there is no problem on debt servicing at all. So there is no fear of a downgrade, etc. And that is what the government should be doing, to really hike up the public expenditure, but by means that they ensure efficient execution of this project.
Absolutely, very important.
I'd just like to say that disinvestment proceeds should be turned into government investment in infrastructure.
Okay, sure.
Yeah.
Dr. Bhalla.
On fiscal deficit and disinvestment, I mean, my one is, I don't believe there should be anything called cess. Whatever you have to tax, you should tax. I also don't think there should be any earmarking of, I'm selling this and therefore this must go into this must go into infrastructure. We should have, that's what governments are there for. This is how much we're going to spend on infrastructure. It shouldn't be dependent on if I sell this and disinvestment. That's number two. Number three is, I completely concur with Rajiv that look, this whole idea that somehow I need to decrease the fiscal deficit and growth will happen. That is not the case. Indeed, if we have a target, and here's purely a forecast, if you have a target next year of 4.1% deficit, no reduction, we will actually beat that. Because what happens is you want growth. Growth is what gives you, if you will, a reduction of fiscal deficit.
Absolutely.
And you had mentioned right at the beginning that, listen, 90% of our fiscal deficit is financed is interest payments. Think what will happen if you were to decrease interest rates, as I think they should, and maybe perhaps it will happen, that automatically will bring down the fiscal deficit. So we have actually, strangely enough, a lot of elbow room on the fiscal side. What we need is growth, and what we need is a reduction in interest rates, which will actually help growth. So it's a win-win situation all around. Do not be preoccupied with 4.1 or 3.6. What are you proving yourself to? Nothing.
Sure. Dr. Dholakia.
Yeah, I think there are a couple of things that are very, very crucial. We need a focus on institutional reforms which are of an administrative character to translate many of the budget announcements into tangible actions. And I believe that the budget would focus on that aspect, because there has been enough work done in that particular field. The second important thing, I agree with both Professor Rajiv and Professor Bhalla that 3.6, there is nothing sacrosanct about it.
Okay.
Though I believe that a signal about fiscal consolidation and fiscal prudence has to be given. So the fiscal deficit target for next year has to be lower than 4.1 on that, but 3.8 versus 3.6 is not going to do that much damage, because if you continue lowering the fiscal deficit ratio, inflationary expectations will remain moderate, and therefore the return to the regime of higher inflation in the years to come, the fear would subside.
Okay.
And what is required to maintain a low interest regime is curb on inflationary expectations.
Okay.